Well. Yes, I'm back. Earlier on, I was talking about top to down analysis. Actually, the pair I was on, unfortunately, I couldn't finish up with the record. All I wanted was to talk about the complex pullbacks. As we see, the break of market structure before the trend changed from bullish to bearish. We saw the major break of structure, which is here, and we continue to see a shift in momentum. Yes, this was our shift in momentum, whereby the bullish trend changed into a bearish trend after taking out the previous higher low. That's the main break of structure. So we continued again to see price taking went on dipping, dropping, creating lower highs and lower lows, lower highs and lower lows, so forming series of big break of structures. So all I wanted to just point out, I wanted to point out something which we act and it's what we call the complex pullbacks. Complex pullbacks actually are these are typical internal structures, the anti-trend move of actually we experience, yeah, in a a trend, either a bearish trend or a bullish trend. So we experience what we call the anti-trend move. Anti-trend move. So this anti-trend move actually we have series of structures which we call the internal structures. These structures come about due to the engineered liquidity here in the market. So as you can see here, we had a reversal. You could see a reversal, which we had a reversal. You could see the double bottoms here. You could see the church break of structure. So all this move that you see here, all this move, all this buy, all this long, this is a short term move. This is what I call the complex pullback. It's a complex pullback whereby we experience a couple of structures in between. You can see this was even the reversal. Reversal structures. These are double bottom. This is another double bottoms here. So which could lead to the trend to change slightly within a short period of time. So this is what we call a complex pullback. So complex pullback, as I just explained, these are the short-term move against the trend, the internal structures. They're literally there to grab liquidity away from the previous order blocks. Yes, this is actually the type of liquidity which I'm talking about is the internal liquidity, which was left when the market was actually dropping or dipping. So yeah, complex pullbacks are typical in all trends and at all time frames. So trading a complex pullback, most of the time I don't normally love trading complex pullbacks unless I scalp. So complex pullbacks, since I just pointed out their short term trend moves, so I don't really rely on them. So, how to trade a complex pullback? For me, I just wait for the market to retest. I just mark my major order blocks, like at areas where the market break or broke major structures. So this is one of the order block that I have. Understand? This is where most of the time I would wait, yeah, for that to sell from. Since we are on a bearish trend, as you see, this bullishness, it will be, to me, it will be a fake move. So I wouldn't trade, I wouldn't buy. Understand? I would wait for the market to pull back. It has been grabbing all this internal liquidity. Let's see, internal liquidity towards the order block, the main order block, which actually I'm expecting to sell from. So what you see here, this is the impulsive move of the trend, which actually we're supposed to trade, and this is the what we call the counter trend move, the complex pullback, of which I don't trade, yes, at all, yes, unless I happen to scalp, yes. So basically, if you are a person who trade complex pullbacks, it's always cool for you to be marking off the order blocks, the previous order blocks that created couple of breaks of structure prior when it was selling. So that you could see that when the market pulls back, it makes a complex pullback. Those order block will serve as a resistance or supply where we can continue to put sales or to sell from. So basically, as you can see here, we have gold here. We have gold. Gold actually is right at the order block. Slightly, yeah, I can see it's right at the order block, which we can take as our supply. So the market actually is likely now to continue, yeah, the drop. Yes, this is an impulsive move. It's likely to continue the impulsive move, yeah, following the main market structure of the main trend. So that's what I wanted to share with you guys. Like, if you are on a bearish market structure, keep avoiding the ant trend, the counter trend moves. Wait and take trades following actually the market structure. So that's how I trade. So that's what I wanted to share with you guys. So here someone would wait for a confirmation. A confirmation, you can only see it, yeah, with a church. If you go to a smaller time frame, let's say, okay, I'm scaling to 1 hour, a church is the only thing which I would wait for. If I'm to sell some kind of a hem, if I'm to sell a hem, then after that I would wait for a break of structure, then a retest afterwards, then it will be confirmed, then I'll continue, I'll go forward and sell. So basically, this would be the only approach. Yeah, if you are waiting for a sell, you only wait for the break or actually for the double tops. Let's say it's always a hem to me. It's always a hem. Yes. Then which creates a church. After the church, break of structure, return to order block. Then here I will be confirming a sell. So that's how I take trades. Yes. This is now, it will be our trade core extension trend continuation. Yeah. So that's it. That's it, guys. Yeah. It's all about trading in line with the market structure.